Coming up on Market to Market, a derecho strikes the grain belt again, marking another change in the normal weather pattern. Honoring the tradition of cheese making and the commodity market analysis of Arlen Suderman. Next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, July 19th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The American shopper is a key cog in the economy. And in June, there weren't fewer or more transactions, just the same. And in the case of market expectations, being benign was a better performance than expectations. The 2024 weather pattern has been anything but normal. Tornadoes, early season hurricanes, and a wet pattern have dominated the headlines this year in the grain belt. David Miller looks at another volatile week that stretched over much of the country.
This week, a region from the Midwest to the East Coast was hammered by strong winds, heavy rains, and tornadoes. Hundreds of thousands of customers were without power as record temperatures rolled in and spiked thermometers across the path of the storms. A suburb of Iowa's capital city, Des Moines, was struck by two tornadoes as the storm front came through. A derecho and a tornado struck Chicago and nearby suburbs. Winds over 75 miles per hour along a 250-mile path hit the Windy City and points east. In downstate Illinois, a dam broke after the rain dropped up to 7 inches on the community of Nashville. City officials in the town of 3,000 reported that 300 people were in the evacuation zone. Heavy rains in Arkansas dropped as much as 11 inches of precipitation across the state. Flash flooding took out a bridge and forced the evacuation of a local nursing home. And a tornado destroyed homes and smashed church steeples in the upstate New York city of Rome. As the storm blew out, the thermometer rose across much of the affected region, with temperatures 8 to 10 degrees above normal. In the heavy weather week, several places across the Midwest received rainfall up to 800% above normal. Despite the rain, drought conditions intensified by more than 2 points, showing that more than half of the country was in some form of drought. Portions of Kansas and Oklahoma, along with areas in the southeast, have gotten drier since the last report. The outlook is for cooler than seasonal temperatures and lower moisture levels over much of the plains, south, and southeast. Parts of Nebraska, Kansas, Colorado, and New Mexico are expected to see temperatures 11 degrees below normal. For Market to Market, I'm David Miller.
While the dairy industry navigates HPAI outbreaks, it also is trying to compensate for slipping fluid milk sales. Market research firm Circana released news this week. The refrigerated dairy aisle has been the largest category in retail grocery with $76 billion in sales. For producers, making a profit between the dairy parlor and the store shelf is often done through further processing. Butter, yogurt, and cheeses have become key products for adding value to what's in the bulk tank. Cheese in many forms has been around for centuries, and for some, what's old is new again. Josh Bittner reports on the tradition honored in our cover story.
It's really neat how you just take a simple vat full of milk and 6 hours later, you got 900,000 pounds of cheese. There's a lot involved in cheese making. There's art, there's science, there's passion involved.
Rufus Musser IV, or Junior as he's known in the rolling hills of southern Iowa's Van Buren County, is an integral part of a family operation helping to boost the local economy.
You got all your different products here. Prairie Breeze, garden vegetable cheddar, tomato garlic, black pepper, caramelized onion, 4-alarm, old style cheddar. We're in all 50 states.
Satisfying demand for the award-winning globe-trotting cheddar cheese varieties crafted by Milton Creamery creates jobs and allows for profit sharing with fellow Mennonite and Amish sourced dairies.
Cheese gets made in the other building, comes out here for aging. So what aging does, it allows the flavors to develop. This particular cheese has been here a little over a year.
It took a little time for Milton Creamery's gastronomic accomplishments to ripen as well. Junior's parents relocated their Mennonite family from Pennsylvania to Iowa in the early 1990s, away from selling homegrown produce and into dairy farming, which brought its own challenges.
We don't have a lot of population, so to get much milk out there, gonna have to do a lot of driving, a lot of delivery time. Dad kept looking at the price of milk in the store and the prices that he was getting on the farm, and he said, somewhere, somebody is making money in between here.
The eureka moment came around 2000 when the elder Mussers attended a value-added dairy conference in Wisconsin and came away convinced that specialty cheese making, not milking cows, was their best path forward.
That's straight off the farm right there.
Dad said, here's our niche. This is where we need to be. You bring milk in, because milk is 87% water, you take the water off, you condense it to cheese, now we can afford to ship it across the country.
After breaking in and lighting up farmers markets for several years with their celebrated cheese curds, Milton Creamery unveiled Prairie Breeze to much acclaim.
The American Cheese Society would describe it as a sweeter cheddar or a new age cheddar. We decided that's going to be the Cadillac, that's going to be what's going to drive the business forward, and it truly has.
Their success allowed for expansion, which helps ensure a steady stream of customers with discerning tastes. Just this summer, Milton Creamery's old-style cheddar won gold at the International Cheese and Dairy Awards in the United Kingdom.
Well known in Van Buren County and around the world.
County tourism officials celebrate the Mussers and a rising tide of similar endeavors, which help bring things like tax relief and school funding to local communities.
I mean, we're very fortunate we do have the Amish and the Mennonite and how they do work with us too. They know that they have wealth coming in, but they also want to share it. They support economic development. We have bakeries, wood carving, cabinet making. It offers unique tourism for people who want to experience their life or just buy that unique craft or food that they make.
The Amish reputation for exceptional craftsmanship and work ethic is well known. Though larger groups are found mostly east of Iowa, the Hawkeye State's Amish population ranked 9th in the U.S. in 2023 at just under 10,000, according to statistics compiled by Pennsylvania's Elizabethtown College.
Iowa actually has quite a large Amish Mennonite population, a plain population, and they're actually quite a big contributor to our agricultural sectors. In dairy in particular, Amish milk makes about 25% of the milk that's produced here in Iowa, so they're definitely big players.
Iowa State University assistant professor and dairy extension specialist Dr. Gail Carpenter says larger mainstream dairy producers, consolidated mainly into northern pockets of the state, harness various technologies to maintain high animal welfare standards and milking efficiency for their huge herds. She says while the Amish shun such advancements, Mennonite beliefs are less strict in practical application, though they adhere to stringent quality standards. Complementary partnerships have emerged, like Milton Creamery and the 5 dairy farms they buy from within 25 miles of their plant, the largest herd being 80 head. Together, they leverage value-added niche opportunities inside a smaller footprint.
They share a lot of the same values that their producers would, so I think that creates a lot of trust there. It's also a very competitive market trying to look for places to sell milk. It can be hard for small producers to find a co-op that wants to buy their milk from them because they just don't have the same volume as a farm that milks a lot more cows would have. So having that stability and that surety and that lack of risk with selling to Milton Creamery fits in with their culture and their values as well.
Carpenter adds each dairy cow in Iowa contributes roughly $24,000 to their local economies. And in a world of fewer producers, frayed connections between customers and food sources, a spirit of nostalgia has emerged, driving demand for products like specialty cheese. The Musser family's vision has led to benefits for their business and the region. For creamery workers, hard work also pays off, in more ways than one.
Forking the cheese curds, stirring the salt in, very intense. Also, when you put the 40-pound blocks into the hoops to put in the presses, between the weight of the hoops plus the cheese in it, you're looking at lifting 60, 65 pounds. I like to tell new employees when they start here in the production facility, you can cancel your gym membership.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market report.
Ideal growing conditions helped add bushels to the crop, but cooler weather and global issues helped stabilize the recent fall in the trade. For the week, the nearby wheat contract lost 8 cents, and the September corn contract fell 12 cents. Weather played on both sides of the current crop, and some new sales started to trickle into the soy complex. The August soybean contract shed 8 cents, while August meal decreased $2 per ton. December cotton shrank by 57 cents per hundredweight. Over in the dairy parlor, August Class 3 milk futures added a quarter. The livestock market was mixed. August cattle improved 72 cents. August feeders cut $3.05. And the August lean hog contract found $3.13. In the currency markets, the U.S. dollar index strengthened 28 ticks. August crude oil lost $2 per barrel. COMEX gold subtracted $20.40 per ounce. And the Goldman Sachs commodity index was down more than 10 points to settle at 563 even. Joining us now, regular market analyst Arlan Suderman. Hello, Arlan.
Good to be back.
Good to have you here. We were discussing weather here for a moment, and weather is a big story in wheat country. It was in the United States, but it's also become a big issue globally where European, Russian, Ukraine wheat is coming to the market or coming to the combines, but they're getting dumped on. What's that doing to the market right now?
Well, it helps support wheat at the end of the week. We started hearing reports of low protein, disappointing quality in France. Now they're 14% harvested, so it's very early. Same thing in Germany. That started causing the world to start saying, okay, what's the quality of the wheat crop? Because we have kind of a shortage of quality milling wheat. And then in that environment, you look at hot, dry conditions in the spring wheat belt of Russia. Same thing in the Canadian prairies, northern plains. And so a little bit of short covering at the end of the week. Don't know that it's enough of a problem yet to really justify sustaining a rally, but certainly something the market's watching.
Okay, I'm sitting at home with some unsold, unpriced grain. What am I looking at for indications of what I should do next?
Probably wheat's in the best situation to maybe be able to take this if we continue to see these weather risks. Keep in mind, we have plenty of wheat in the United States. That's the bad news. We're overwhelmed with wheat after the last crop report and a big push, big increase in production estimates. The good news is the market trades Black Sea fundamentals more than they trade U.S. fundamentals. So if this heat wave does continue, and there's some question about that, but if it does continue, we may have an opportunity to take wheat price a little higher. Farmer selling is kind of dried up now for a little while. That seasonally happens. We tend to get a little bit of strength. Perhaps we get a little bit more of a rally here to sell. Corn and soybeans, the farmer's the big long. End user knows it. Managed money knows it. They know that if something happens to create a scare, the farmer will sell in that rally, let them off the hook. So rallies are going to be very difficult to sustain. Perhaps the strength in the wheat can help that a little bit if it gets going, but the farmer being long is really hurting right now.
If you are the corn producer specifically sitting on that old crop, sitting in the bin, the government says there's these huge amounts of stocks. There's still going to be a large carry out. Oh, and by the way, we have this ridiculously large crop that continues to grow. If I'm sitting old crop specific, am I really only going to get help from wheat? Or you mentioned a scare. Is that really what we're at right now?
You know, from a weather standpoint, we could get a scare in the Black Sea because a lot of Ukraine's corn has been in a lot of heat and is facing some yield loss in that region. That's not going to positively affect our exports for another 6 months or so. So that's waiting quite a while to really have an impact. Then you're waiting to see if La Nina has an impact in South America. Look at what basis is doing now. Really strengthened because farmers aren't selling. But we know there's a wall of corn we anticipate coming at some point. So are you going to be one of the first people to take advantage of that strengthened basis now and your interest payments, or perhaps put your money out at interest that you have and then use that money, if possible, to re-own if a story does develop?
You have a question that I think I'm going to ask in Market Plus, very similar to that. You must have peeked ahead at my question sheet here. Let's talk new crop for a minute because like retail sales, neutral is a good thing. We don't have, weather is neutral, but if not, it's good, which ends up being bearish to the crop. But then we turn to a cold streak, cooler streak. What weather story is going to be the headline grabber enough for traders in the algos?
Right now, the risk of a hot, dry pattern seems to be lower than what was anticipated. I still say one of the bigger risks to watch is warm nights during the grain-filled period of time. That can hurt yields. Probably still less than 50% odds of that, but I think this is still the type of year where that could develop. So I'm watching that for now the last half of July into August.
You mentioned the weather is different. I mean, because there was always this talk of a hot July. We're already 3/4 of the way through the month and we haven't had a hot July, and it's not really going to get much worse hotter next week. Has that ship sailed then, other than the hot nights that you're referring to?
Yeah, I think the hot nights is the bigger story temperature-wise. That could move the market. But the other thing to keep in mind, I know there's a lot of people watching here saying, but what about the flooded out areas, the ponded areas in Nebraska? What about the hailstorms? We can see them on the satellite data. I do think harvested acreage is going to come down. And when you start bringing harvested acreage down, if you bring it down 1 million acres, that's 180 million bushels off the bottom line. We need to take about 600 million bushels off in order to get the market interested. Okay, take 1 million or 2 off, that's a start in the right direction. That's not enough. But that does reduce the margin for error should we have warm nights and or we have problems in the Black Sea that reduce their crop and or we get La Nina to create problems with the South American crop this coming year. That makes an easier path to get to something like that.
Well, I think I've asked this question 3 times. I'm going to ask it a 4th. This is Neil in Ohio who wanted to know, Arlen, what will it take to reverse the bearish sentiment in the markets? And when that happens, will the door be large enough to let out all the traders out of their short positions?
Right now, with the farmer being the big long, probably so. That's why they're so comfortable in the corn and soybeans. In the wheat, not so much, because now we're getting into a time period when the farmer's not selling. You may sell some more when his 30 days free storage runs out, but a little bit more concerning wheat, which is why wheat may have a little bit more chance. But corn and soybeans, management is sitting pretty comfortable right now with the farmer being the big long. When they get rid of that, then it'll be a different story.
The bean story seems a little more, this week, range-bound. Are we set on that path for the next 2 weeks?
Yeah, we got a little bit of a pop in this market because chart support held there for a few days, and then you combine that with the heat and dryness in the Black Sea, which is reducing the size of the canola crop, the sunflower oil crop, the soybean crop, and then the same thing in the Canadian prairies and northern plains. That may have a little bit more legs on it. We'll have to see and watch if soy oil can provide some support for soybeans. But that's really what we're putting our hopes in right now, as long as this looks like it's going to be a good crop.
New crop story towards the end of Friday started to emerge that China may have overextended itself in how much new crop buying they were wanting to do. What does that do to a market over the weekend?
Yeah, as we look at China as importing about 6.5 million metric tons in July, August, and September, beyond what they did a year ago and beyond what they need. And that means that they can use those soybeans then in the fall when they normally would be buying from us, reducing their dependency on us even more than they did last year. If you look at the last time I looked here a week ago, they had purchased about 22 million bushels of soybeans, which is about 1/10 of the new crop soybeans they normally have this time of year. There was a big sale to unknown destinations midweek this week. We don't know if it was China. It may have been. There's some speculation in China that Sinograin, which buys for their reserve, may be trying to stock up on U.S. soybeans for the reserve before the election day, before a possible Trump victory. But we can't confirm that. The commercial buyers for the crushers, though, they think there's going to be cheaper beans ahead, and they're still waiting.
And there is a political sentiment to the markets for China specifically in soybeans, and we can fully flesh that out a little more in Market Plus because it needs more than 30 seconds that I have. Quickly on cotton, we're seeing an export story turn again back to the negative.
It really is, and it's largely just like soybeans and corn. Brazil has cheaper cotton. China buys 40% of our exported cotton, and they're going to Brazil.
All right, in livestock, we have cattle on feed came out today, 100% on feed, place 93. What is that telling you for direction guidance here in cattle or feeders?
Placements were a little bit lower than what was anticipated. They were expected to be lower because of 2 fewer business days in June this year than last year, but that was even lower than expected. So that's mildly supportive for Monday.
Which is a surprise, isn't it?
Yeah, it really is, and that's why the market hadn't anticipated or priced it in.
Live cattle specifically, there's the whole we're done with, we're not going to celebrate anymore, there's no more barbecues to be had, the demand window is past. Beef is still high, still enjoying very large prices. At some point, this party has to end.
We did see this past week the choice cuts start to break. Hamburger's still really tight because the cow slaughters come down. That's the first step in starting to rebuild the breeding herd. Now we'll see if we start holding back heifers into fourth quarter.
Who is driving that decision?
It's really going to come down to weather and obviously the economics to do so. But it looks like we've got another round of tightness coming ahead.
How soon on that?
We think maybe the fourth quarter of this year. We thought maybe that last year, but then the weather didn't cooperate. We didn't have the pasture, and so it put it off a year.
Speaking of pastures on feeders, pretty good feeder pasture condition in many parts of that area. What does that mean to the market?
Well, and particularly if we can get rains in the plains going into the fall, good wheat pasture and everything, that tends to help encourage that cycle, holding the heifers back and starting to rebuild.
Hog-wise, it goes back to China again. There's this content of we're going to send some exports to China, but then they're not, then they are. Where are we?
Yeah, I think China, it's hard to depend on them. We've seen good shipments elsewhere this year. That's been good. But overall, the demand really hasn't been as much story as an oversupply, more supply than we anticipated. But the whole product situation seems to have really felt better this last week. The product market just kind of felt a little firmer this past week.
As we close, the dollar, that is one of those that continues to be, whenever we have a global grain need, that becomes more dependent. Is that going to change anytime soon?
Yeah, I'm really afraid that the dollar is going to continue to be one of our problems, Achilles' heel in the commodity markets, because Europe has more problems, the yen has problems, the other major currencies we compete with have significant problems.
What does all that mean?
That means a strong dollar, harder to compete, and that's the biggest advantage Brazil has right now.
And they needed another advantage to, I mean, a lot of things have been going Brazil's way right now.
Yeah, they really had. And this last week I had a group of Brazilians in my office, Brazilian farmers and hedge fund people, and they're saying, you know, what price is it going to take for the farmer in the Midwest to plant less corn and soybeans? I said, I hate to tell you this, but they're not going to. And they just got a depressed look on their face.
Well, I'm not depressed. I'm happy you're here, Arlen. Good to see you. We'll continue our discussion here in a moment, okay?
Okay.
All right, Arlen Suderman, and as I said, we'll pause. This is the market analysis. We're going to continue in Market Plus as we keep talking about the markets in that segment. You can find both analysis and plus on our website of markettomarket.org. The first place that this program appears is on our YouTube channel. Stay in the loop by subscribing to our feed, clicking on the bell, and getting those notifications of new content. Let the technology work for you. Find us at Market to Market on YouTube. Next week, an extended discussion on the livestock and commodity markets. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
For over 45 years, Steiner Tractor Parts has shared your love of antique tractors, new parts for old tractors. Learn more at steinertractor.com or at 877-559-7887.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.